and welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are a mixture and journey towards financial freedom, financial well-being, financial products so you, like me, can reach your goals sometime in the future. Now it's not to boast or brag or say look at me, it's to say, well, if I become a net millionaire, so can you. Just need to put some plans or some kind of actions in place. Now let's get into this latest video. I do have a workplace pension with my current employer, but it's simply due from auto enrolment. So I'm limited on what funds I can put into it or the amount and the funds with investments. So I do a Sipp so I can control one, the level of investments, and two, I can pick my own funds and investments. Now the aim of the portfolio is an annual return of 10%. We're looking for dividends during this year of £4,500. I'm looking for a year-end value of £117,000. So let's see how the portfolio is done. End of July, we were over 7% in profit. End of August, we're down to 5.24%. So the portfolio has gone from £106,364 to £101,201, a loss of £5,163 in the month. But we're still up 5% in the year. Quick comparison, the FTSE 100 is up nearly 1% within 2023. So we are, shall we say, beating the markets in the UK. Look at contributions. Normal contributions of £200 a month. The government gives tax relief are predominantly based in financial services. On our platform providers charges fees of £14.76 based upon a percentage of the portfolio valuation. If we look at the following chart, quick graphics of where we hold. So predominantly UK and Europe based, 82.4%, 15% in USA and Americas, and 2.4% in Asia and emerging markets. Now we have received one dividend during the month. We received a dividend from JD Sports, somewhat of a growth company, of £16.75p. Now our holdings across our shares is given us a yield of 4.29%. And the year to date we've received £2,761 in dividends. We are now below our threshold, so we're a shortfall of £238, but we do have some very nice dividends during the month of September across numerous companies, so we will, shall we say, be back above our target. But it just goes to show we'll have good months, we'll have bad months with regard to dividends, but all the dividends is reinvested back within the portfolio. So let's have a delve into the portfolio and see what sort of shares or funds we hold. So let's look at our shares first. So based upon the following chart, we own 15 shares, 8 in profit, 7 in loss. Makes up £77,910, of which 66% is in the FTSE 100 and 11% is in the FTSE 250. Now our largest holding in those are, shall we say, in financial services, because what we know about, happy with. But these are my own personal recommendations. Okay, we own 4,533 shares in Aviva, £17,000, 16% of our portfolio. Everyone needs insurance. They have struggled lately, but they're now giving a very good yield of 8%, and it will pay a very nice dividend in September. We own 34,420 shares in Lloyds, the banking group, £14,500. 15% of our portfolio, again, has struggled during the month, but a very nice yield of around about 6% will again pay a very nice dividend within September. We own Greggs, the bakers, 280 shares, £7,000, has struggled again during the month, but makes up 7%. Very cash rich, is expanding, and trading statement very good recently. Is what we call a growth company. We own Drax, the biomass or the pellet maker, 1,229 shares, £6,800, 6% of our portfolio, again done for a long-term hold, is paying a very nice yield of around about 5 to 6%, and it will pay a very nice dividend in the coming weeks. Back onto the banking sector, we own HSBC, 1,122 shares, £6,500, 6% of our portfolio. Away from the UK banks, so it's very good presence overseas, but it has reinstated quarterly dividends and it will pay a special dividend at the start of next year. And then back onto the insurance companies, legal and general. 2,047 shares, £4,500, 4% of our portfolio. We have been buying over it recently because it is paying a very good yield of over 8%. We own Barclays, 3,038 shares, £4,500, 4% of our portfolio. Again, very good yield of about 5.6%, and again, it will pay a very nice dividend in September. We own JD, as we said, we got a dividend a month, 2,500 shares, £3,600, 3% of our portfolio, very cash rich, has done a lot of expansion within, shall we say, in Americas, but a very good long-term growth company. We own 1,233 shares in Sainsbury's. Everyone needs to eat, shall we say. £3,000, 3% of our portfolio, but very cash rich and does pay good dividend. And then finally, we own some shares in the major oil players. 150 shares in Shell, £3,600, 3% of our portfolio. And 542 shares in BP, £2,600, 2% of our portfolio. But those two companies paying us a very good cash dividend every quarter, which will be reinvested back into the portfolio. Now, other holdings we note, we own Penn, the water company, has struggled lately because of what's happened, shall we say, within the water sector in the UK. We own AJ Bar, the drinks provider. We own AJ Bell, the platform provider, and we own Card Factory, the retailer. So, a collection of shares, shall we say, but all safe, secure, does what it says in the tin. They've been there for many years, they will still be there for many years, but they are paying very good dividends. Some have had very good results, but some of the sectors have been affected by, shall we say, short-term market noise within the UK economy. But remember, they're my own personal opinions. They're all done for a specific reason. They're all what we consider long-term holds. Remember, if you like the videos, smash the like button, subscribe to this channel. Now let's delve into the funds held within the portfolio. Now we look at the following chart, quite selective on the funds. We own 5 funds. Okay, it was done because we were, shall we say, solely UK based, solely, shall we say, focused within shares. It was done for diversification. We own a legal and general technology fund, owns about 270 of the biggest players in the tech sector, £8,200, 8% of our portfolio. We can just switch off. Very low fees, very low charges. Did struggle in 2022, has had a great run in 2023. Our next holding is, shall we say, we've done for diversification, is a Fidelity World Index Fund. £6,600, 6% of our portfolio, very low fees of 0.1%, and we did top it up with £1,000 in the holdings during the month. We can just switch off, shall we say, it was done across numerous sectors because we were, shall we say, UK based. But it does give a return last 5 years of around about 9%. Next holding is quite selective, Bally Gifford Positive Change, £3,400, 3% of our portfolio, but again has had a very good track record. It's the future, shall we say, ESG. We own a Lintel Train UK Equity Fund, £2,700, 2% of our portfolio, owns about 40 companies in the UK and Europe, but quite selective, all household names, shall we say, Diageo, Relics, London Stock Exchange, all safe, secure companies. And then we own a global growth fund, our one fund that has struggled. We own £2,400, 2.4% of our portfolio, but again, it was done originally for the diversification. When it comes back into profit, we may move that fund, shall we say, into the Fidelity World Index because it's going to give us cheaper fees. So we said that 5 funds, 4 in profit, 1 in loss, but they were done for a specific purpose. Again, like a holding, shall we say, apart from the Global Growth Fund, all funds we're going to hold for the next, let's just say, 3 to 5 years. But remember, they are my own personal opinions. And across the, shall we say, the objectives is an annual return across our shares, across our funds of 10% year on year. So as I said, we have had a bad month, we've lost over £5,000, but we've gone from a profit of 7% this year to a profit of 5% this year. Hopefully we'll meet our objectives, but we do have a very good month coming up in September, and it will pay us some very nice cash-rich dividends, which we will reinvest within the portfolio, which is, shall we say, in a tax-free investment wrapper. Remember, it's not a get-rich-quick scheme. If If you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.